Hey everybody, welcome to the Property Chat with KG, and we are on our third episode where we are actually looking at different ways on how to get started in property. And this week's episode, I'm saying you should buy a house first before you buy a car. And I will explain exactly why I say that. I'll give you all my explanations, all my reasons. And if you agree, sharp. If not, sharp. But if you find this video interesting, if you find this video is ticking quite a lot of boxes, this channel is ticking quite a lot of boxes, please consider subscribing to the channel. And why am I saying this? We're going to look at a whole lot of different benefits, advantages of starting with a house compared to a car. So we're looking at, we're going to have like a massive cash flow. You're going to build assets. There will be asset growth. You will be building equity. Insurance is low. It's better insurance. There's better interest rate. It's 11.75 at the moment. Car is about 22 plus interest rate. And there will be profit when you sell the property later on. And there's so many more benefits when you have a house compared to a car. So I still maintain my argument. You should start off with a house, not a car. But I know we live in society. Not any of us are living in isolation. You're living with people, living in society, and there's something that's called societal pressures. That you went to university, you made it, now you have to pull up as a success. Pull up as those people that are going to inspire the people, the little ones that are looking up to you in your town, in your kasi, wherever you live. You have to pull up. And the easiest way to pull up as a success is to pull up with a car. That's the easiest way to pull up. And this doesn't only affect us in a small kasi, small township, small society. It's even affect people that we're looking up to, the celebrities. I watched one of the videos on TikTok, and in that video they are interviewing Zex Bantwini. I have so much respect for Zex Bantwini. Even after the video, I understand what he said, why exactly he said that. So he was actually saying when he pulls up at his family house, his village, in the concept, wherever, he needs to pull up with a car. He cannot pull up with a house. And when I looked at video, I actually said, this societal pressure doesn't only affect people on the ground, even people that we consider them successful people, it still affects them. So it's difficult to run away from it. But what I'm saying is, let's pull up, let's pull back, not up, let's pull back, and let's look at the things from a different perspective. You know, it's different when you're looking at the things from inside compared to outside. So from the inside, let's pull up and be at the back and say, okay, we're going to start off with a property. Yeah, I know you need a lot of money. I know you need, but remember, you went to varsity, you are working, you managing your money, you are doing so well, your credit score is doing fine. So the banks are open to giving you a home loan. Now, this is going to be in two sections. So we're going to look at you buying a house and living in the house. And the other one is you buying a house and renting the house. So we're going to start with renting the house. Then in the other video, we will do buying and living in the house. Because if we do both at once, it's going to be a long video. And I'm trying to keep them short and sweet, so it's straight to the point and it hits home. So let's say you buy a house and you decide to rent it. So you rent the house and you're going to rent the house for over 5 years, right? 5 years. And when you do that, you will get tenants. Make sure that when you get tenants, they pay full rental. So let's say your mortgage is 5,000, and we need to make sure that in a rental that we're going to put up to the tenants, we include the rates, we include the levies, because they are the ones staying there. They're the one enjoying. You decided to stay home with your parents, so you can be humble. So you can be humble for the first 5 years. So make sure they pay full. So if the mortgage is 5,000, includes the rates and taxes, whatever, if it's 1,500, then you'll say the rent is 6,500. You get that one? sharp. And then when we do that, you're going to build equity. You live in the house 5 years, your property value will move up. As always, it's not going to drastically move up, it's not going to double, but it will move up. And at the same time, you are getting the rent. That's cash flow. Now, it's getting more interesting. And this requires quite a lot of discipline from your side, So somebody's paying your house, so it means you are not paying any against your property. Somebody's taking care of it. And we're going to do that for 5 years. So in that 5 years, you were supposed to pay your mortgage $5,000. You're still paying it. You still take that $5,000 and you put it into your Access bond account. You're putting it into your Access bond account for that 5 years. So 5,000 multiplied by 60 months. It's going to give you 300,000. 300,000. That money, will put it in your Access account. Using Access account, particularly for us who are having bonds, mortgages that we borrow, that we're having home loan. Every bank in South Africa has it. It's so beautiful. It has wonders. I don't want to keep this video long and I don't want to be off topic. So if you want to know about how Access bond work, let me know in the comment section below. So it's 5,000 multiplied by 60 is giving you 300,000, a whooping 300,000 that you're putting religiously so every month, regardless. In your brain, just say, I still pay the mortgage. I still pay the mortgage. Then you put in that 5,000 every month. 5 years later, it's 300,000. What you can do is to get a reliable car for 100,000, 150,000. You can buy that car cash, no deposit. And with the 200,000 that's left, you can start putting it against income generating assets. Maybe you can go and get another house, or maybe you can build back rooms. I don't know what you can do, but you can put it against other assets that are going to bring money to you. Remember, what we're looking for as individuals, we're looking at reducing financial stress and intentionally building financial freedom, working towards our financial freedom, because we don't want to work forever. We don't want to work forever. We don't want to work until we're 60, 65. Our knees are painful. We cannot walk. We cannot enjoy our pension that's going to come in a lump sum. And we've got a lot of grandchildren. Let me not get off topic. Let's continue. So you're still choosing to be home and you're doing exactly that, right? And you're putting that money against income asset. You at home with your parents. You stretch it again for the next five years. Then after 5 years, you're halfway with your mortgage. Let's say it was 20. You're halfway with your mortgage. And you still have other income generating asset and you're home. You can build back rooms at home. You can build another house. You can refinance. You can do quite a lot of things. And then you still don't have financial stresses. Instead, you are building your generating income assets as you work towards your financial freedom. So you will then have option as you will have cash flow, money coming in. Option will be maybe you want to travel. That's when you can start traveling the world and see a whole lot of things. I recommend that to quite a lot of us to travel, because there's a lot of learning in travel. You cannot learn that in the classroom. Or another option will be, if you like, you can start a family. You can start a family, get married. As a man, you need to start a family when you have money. You'll be able to take care of the children, of your wife, of the property. It's better that way. That's all I can say for that. Or you can do more investment. You put more into income generating assets. If you enjoy this video, you will definitely going to enjoy this one. And if you are serious about learning and investing in real estate, you will consider subscribing to this channel. Thank you so much for subscribing to this channel. We will see you